Center in the website, which deals with a brief overview of our exhibits, hours of operation, and directions to get to the center. So we certainly hope that people will not only view our entire website, but get a little more information on the center through that method also.
That footage you saw on the screen was from the 1920s of the New York Stock Exchange. You can see what it looks like today with all the technology, the television cameras in the room. They now have some 9 cameras that they have permanently in place here that Tony Valenti is in charge of, that belong to the New York Stock Exchange. But CNBC and Bloomberg and CNN all have cameras in this room, and they report from here on a daily basis. And that's why we've invited 2 journalists to our table to talk about the impact of the media on this whole business of stock exchange. Floyd Norris, what role does the media play in this game here?
Well, we play a lot of roles. Television has changed this exchange. The exchange itself used to be widely ignored by journalists. And still, print journalists such as myself and Alan get down here very infrequently. You don't need it. The machines tell you what's going on. But it served as a backdrop, and one of the interesting things it's done since television came in, and now shows every opening bell and every closing bell, this has become quite a celebrity thing to get to ring that bell, and that's something the stock exchange uses with visiting dignitaries and corporate officials. That wasn't true in the past when the bell was just the bell, but now it's the TV show.
Alan Sloan, what impact do you think the media's had?
Well, it gives everybody on the stock exchange something to do. It makes them think they're important. And it makes a lot of people who sit around all day and watch this twitch. I know I sit around when I'm watching one of the shows showing stocks every second. I have this mad urge to call up my broker and do something, which I successfully suppress. But I think it's really made a lot of this easier for people to see and easier for them to find out what's going on.
Well, let me ask the 2 of you how you go about your job then. And what is your job at the New York Times, Mr. Norris?
My job is to write columns on financial markets and to a certain extent to supervise our coverage of them. So I'm working the phone, using the Bloomberg machines or other machines in the office to monitor what's going on. And looking for unusual things to write about.
You mentioned the Bloomberg machines. What are they?
They're wonderful machines. There are competitive machines that are about as good. We rely mostly on Bloomberg in my office. These machines, they give you quotes, they give you histories of prices, they give you news. And the result of this is, with it, you can very quickly learn a lot about an individual company or a lot about how a stock is trading or about how the options are trading. And sometimes the more interesting things may be people trading options with inside information before a deal comes out. It's made covering the markets a lot easier than it was when I broke into this business.
On the screen is actually, I think, if I'm looking at the right place, the Bloomberg booth, which is right over to our left. And that's where they operate from. And there's a booth on the other side for CNN and in the other room for CNBC. Alan Sloan, how do you go about your job?
Well, unlike Floyd, I don't have to write every few days. In fact, I don't even have to write every week. So I have the one advantage over Floyd, which is contemplation. I get to sit and watch on a Monday when the stock market goes down 600 points or whatever, and I don't have to do anything except sit and wait for Tuesday to see what happens. So I do a lot of thinking. I do an awful lot of reading. I do a certain amount of talking to people. When something is going on that's interesting in the market, I tend to have CNBC on and listen to it. And my problems start at the end of the week when I have to figure out what people are going to want to read next Monday and Tuesday.
In the next few minutes, mainly about 24 minutes, the market will open here, and we'll watch it open, as Floyd Norris said television likes to do. And we're going to open the phones up right now for you to participate with our 2 guests. Floyd Norris, who is a native of Los Angeles. He's the assistant business editor for the New York Times. He's been at that paper for the last 9 years. He's a Columbia University Business School MBA graduate. What year?
I graduated in 1982.
And you attended the University of California at Irvine?
That's right.
Our other guest, Alan Sloan, is the Wall Street editor of Newsweek. He's been there for the last 3 years. He's a native of Brooklyn, went to Brooklyn College, and got a master's degree at Columbia in the School of Journalism. And our caller first for our two guests is from Milwaukee. Good morning. Go ahead, please.
Good morning. Great show, Brian. Every time I see you, it's a great show.
Thank you, sir.
I'm interested in what I perceive as a psychological effect of news coverage of the market. It seems so frenzied, and when the news commentators come on other channels like CNN and the rest, they always attribute a market raise or a market drop to nervous somebodies that are reacting to something. Now, is this true? Is it? I mean, are there anxiety-ridden neurotics running around down there?
I think you struck a bell with our two guests here. Let's let them both have at it. Alan Sloan, you want to start?
Right. Well, I've been writing these kinds of stories for 30 years, and I'm still waiting to see a cash-laden investor sitting on the sidelines because I've read about him for years. But if you go around here, you're not going to see anybody with pockets loaded down with money sitting on the sideline. I think what happens is in journalism, people feel a need to have a rational explanation for something, so they find someone to tell them what it is, regardless of whether it turns out to be true.
Mr. Norris?
I think there is something to be said for the nervous theory. Money is very important to people, and people around here and at brokerage houses and at money management firms are paid a lot of money to get it right. And they are constantly worried they're not getting it right. And new information may be important, it may not be. Yes, it's a business that tends to have burnout. People get scared, and they eventually, you don't see a lot of people retiring from this industry at the age of 65.
Next call, Booth Bay Harbor, Maine. Good morning.
Yes, good morning. I was interested in I read in the New York Times maybe about sometime in the last couple of years, and I also read it in the Wall Street Journal, that 2% of the population in this country outright owns and controls 40% of the wealth in this country. And I also read in Newsweek about 6, 8, 7 months ago in the issue they did on Ted Turner that of all the estates in this country valued over $1 million, that 80% of the people of those estates gave not 1 cent to charity. So therefore, couldn't one come to the conclusion that capitalism has proved there are a lot of greedy people out there that give nothing away?
Alan Sloan.
Well, sure, there are a lot of greedy people out there who give nothing away, but then there are people like Floyd and me who are greedy, but we give something away. You can't leap to conclusions like that from information like this. You look at a whole lot of countries that are supposedly socialist, and the state is supposed to take care of you, and no one takes care of you. I don't know what else to say.
I don't have very much to add. Sure, there are greedy people. Some people are rich and very generous, and some people are rich and probably not very generous. I'm not familiar with the statistics you quoted.
Cincinnati, you're on with Alan Sloan and Floyd Norris. Go ahead, please.
Yes, sir. As we watch the frantic activity on the floor of the New York Stock Exchange, it occurs to me I can see where that was necessary some years ago with the paper flying and the screaming, but today with the computerization and all of the laptops, is that type of activity really necessary anymore?
Mr. Norris?
I think so. Some years ago, you may remember NASDAQ ran ads, the stock market for the next 100 years. And there are reasons why you've never seen a picture of the NASDAQ trading floor. It's because they don't have one. They've now arranged a sort of TV studio so they can get some TV time too, but there's no way to watch it taking place. In calm times, electronic matching systems can work very well. But there is no substitute for what goes on here, I think. And I think these kinds of markets, they're called auction markets in the jingo, have worked very well over time and have proven that computers cannot replace them.
Mr. Sloan, when do you write a column and you say after it's over, that's why I got in this business? What kind of a column is it?
Well, it's usually a column that has nothing to do with the stock market. It's usually a column where I found an example of financial or managerial excess where someone has done something disgusting that no one else has put together, someone's dodged taxes successfully in something that's gotten little or no publicity, and I write that, and then something happens, that's when I say that's what I got in this business to do.
I want to read you a paragraph that I read today in the USA Today by Bill Welsh, and it struck me that you would have gotten a column out of this paragraph from reading your columns in the past.
Okay.
The exchange came as Congress prepares to reconvene next week in a political climate altered dramatically by a federal budget that is essentially balanced now and could start to show surpluses.
Well, as anyone who's read my stuff knows, I don't think the federal budget is balanced. It says that it's balanced, but if you include Social Security, which I think you should, the budget is still out of balance by $100-something billion. So I would write just the opposite.
Los Angeles, you're on the air. Go ahead, please.
Yes, it's Ted Woodley. I appreciate your panel. I wanted to find out how high you think gold and silver and commodities will go, and conversely, how low the dollar will fall, given the fact that the Monetary Control Act passed April Fool's Day 1980 makes the U.S. Federal Reserve the lender of last resort to the whole world's banking and possibly corporate and countrywide problems.
Mr. Norris, thank you for giving us a prediction.
Well, you're welcome. What you've just suggested is that current financial market trends are going to turn around. Gold bulls have been the least happy people in America for some years now. And I don't know whether that's going to change. There is a great belief in the world now that central bankers, particularly the Federal Reserve, but in general central bankers all around the world, are wizards who know what they're doing and can keep everything in control. That assumption is being challenged in Asia. I don't know whether it's going to end up badly or not. I hope it won't. Until the Federal Reserve proves they can't handle it, I don't see a rally in gold.
Burlington, North Carolina, you're on with Floyd Norris and Alan Sloan. Go ahead, please.
Great show, Brian.
Welcome.
This is Bob and Monica from Burlington, North Carolina. We'd like to say hello to Alan there. We were his next-door neighbors in Maplewood, New Jersey.
Oh, my God.
Hey, Alan, you're looking good. A little heavier than I used to be, though. And just to tell you, just to show you how old-timers get together, we had dinner with Gene Nelson just about a month ago when he was passing through North Carolina.
Now, caller, why did you move to North Carolina?
Oh, Alan got mad at AT&T and wrote an article in Forbes magazine, and they transferred me down here.
Well, I've always been the scourge of the neighborhood.
That's right. You still fixing your gutters?
I'm sorry, I didn't hear that.
Still fixing your gutter, I think.
No, I've moved. I left it for the new owner.
Thanks, Burlington.
Give our love to you and your family.
Take care.
Thanks for the call. New London, Connecticut, you're next. Go ahead, please.
Yes, both of your guests seem to be journalists that have been in the business for a while, and I've noticed that the volume of the daily volume keeps going up every year, obviously. How much of that volume is driven by institutions, and how much of it is driven by myself, an individual investor?
Thanks. Floyd Norris.
The vast majority of trading is by institutions. Individuals still own an awful lot of stock, but they trade it less frequently. That said, of course, much of the institutional volume is by mutual funds, and another large chunk of it is by pension funds. Pension funds are investing on our behalf as individuals. Mutual funds are responding in large part to what we do. When you send in money to your mutual fund, they've got to do something with it, and that generates volume.
We were talking earlier when the show started that out on the floor, Alan Sloan, is a flag way out there, if you can see it, the POW-MIA flag.
Yeah.
And Richard Grasso, who's the chairman and CEO, was explaining that how on Veterans Day they stop here and that people pay tribute to the veterans. Are you surprised that you find the POW-MIA flag out there?
I don't think it makes any difference. I'm surprised, but now that you've told me, I'm not sure it matters.
Does it matter, do you think, Mr. Norris, that flags and things hanging around in here?
No, I don't think it matters. And I have my doubts they were here before the TV cameras, but I don't know that.
Cleveland, Texas. Go ahead, please.
Okay, I want to thank C-SPAN for the opportunity to see a place that I probably never would have actually went into. And my question was about the military's impact on the stock market, but that POW flag does matter. It has a lot of feeling, and I'm glad that it's there.
Okay, sir. And what was your original question, though? What did you want to know? How...
That I think the stock exchange for having that POW flag up there, but what is the military's impact? You know, the operation of the U.S. military and the stock exchange.
Okay, good question. Thank you.
I have no idea.
Let me broaden it to ask how much you think military arms sales and equipment sales to the military itself have on the whole business of the American economy.
Obviously, there's a substantial one and varying. It used to be, before World War I, that people uniformly believed wars were bad for stock prices. And there was good reason for that. Obviously, some country's going to lose, which is bad for its stock market. But in addition, the money being diverted to an army tended to drive up interest rates in whatever country we're dealing with, and that tended to hurt stocks. In 1915, the Dow Jones Industrial Average had the best year it's ever had. And the reason for that was that people figured out a lot of companies were going to get very rich selling war materials and other materials to the European countries then fighting World War I. In fact, they figured it out so well that they overdid it and prices went too high, which can frequently happen in this market. Yeah, over time, the military contractors become very popular, and sometimes they become very unpopular with the stock market.
In about, let's see, I can't keep track of the time here. We've got about 12 minutes or so, and the market will open. And Francis Carey, who is with Carey Diversified, he's the CEO, will ring the bell in today as his company joins the New York Stock Exchange. But for Alan Sloan and Floyd Norris, we go to Accoteague, Maryland. Go ahead, please.
Yes, hello. My name is Brian. I'm calling from the Canterbury School. I would like to know, what do you think is the most profitable stock to get into right now?
Alan Sloan, do you want to recommend stocks?
No, I don't want to recommend stocks because A, I don't know. B, Newsweek will go berserk if I start recommending things. And three, if I really knew, I wouldn't be here. I'd be out there buying it. So I can't help you. I'm sorry.
Do you buy stock yourself?
Yes, but I buy it very rarely, and I follow all sorts of guidelines, and I tell the people at Newsweek everything I'm doing.
And Floyd Norris, do you buy stock yourself?
No, the Times has a rule they applied to me when I was hired. I'm allowed to buy stock in the New York Times Company on the theory that if I ever write about that, people will not think I'm objective anyway. But otherwise, I can buy mutual funds, but not individual stocks.
Port Charlotte, Florida. Go ahead, please.
I have a question for the gentleman. I recently took my stock portfolio out of a large, can I say the name of the company?
Yes.
Out of a Payne Weber account, and I put it into my bank, which has a trust department. And now I'm wondering if I was wise. Am I likely to lose my investment?
Mr. Sloan.
Well, again, neither Floyd nor I are in the investment advice business, and to answer that, I'd have to know a lot about you. I'd have to know the broker you left at Payne Weber. I'd have to know something about the people you're getting into at the bank. So all of this is a fancy way of saying I can't help you because I don't know enough, and in any event, I'm not in the advice business.
Let me ask you both a question that relates to some things that you've written before, and Mr. Norris. What is your experience about American companies? Are they honest when they make announcements, when they portray themselves to the American people?
Well, they're not dishonest. There are laws against lying. If you're a company and you have stock or bonds that are traded in the public markets and you tell a lie, you have a good chance of going to jail. Now, I've done things over the years involving companies that lied, and Floyd has done much more than I have about that, but that's not typical. Generally, they tell the truth. They'll tell their side of the truth. They'll make the truth look good. They won't tell you bad things, but they won't lie.
Floyd Norris, how often do you find corporations are being dishonest with the public?
I think Alan is right. It's rare. One of the wonderful things about our system is that companies are forced to disclose all kinds of stuff in SEC filings. Amazing amounts of information is disclosed in filings, and it is not read enough by investors, not read enough by analysts in many cases. Analysts ought to have studied those documents intensely, but sometimes you discover they haven't, and it's really kind of sad. Out and out lying, yeah, I can think of examples. They're relatively few. Painting the picture as nice as we can paint it And selective use of facts obviously is much more common, as in any walk of life.
I'd like to have each of you think of a time when you've written something, either a story in the New York Times or a column, or one of your columns where you've had a direct impact on the way people look at the market or a company. And I want to remind the audience that in about 9 minutes we'll go to the opening bell. We want to let you watch it as it happens and just observe it. The noise level in this room has gotten significantly higher than when we started about 2 hours and a half ago. Let's go to Brooklyn, New York next for our call. Go ahead, please.
Yes, my question is, I've read a couple of months ago something about, it had more to do with NASD firms, about mob influence on Wall Street. I wanted to know what your guys' comments are on that.
Thank you. Alan Sloan.
That's not a subject I've dealt with or I know anything about. I'll pass.
Floyd Norris.
There have been articles about that, largely in Business Week, which has done some fine work on that. These were primarily the allegations, and I don't think any of them have been proven, primarily penny stock firms. Some of the sleazier firms, few, if any of them, are members of this exchange. When you're dealing with a brokerage firm, it pays to inquire about the firm's reputation. You can call your state securities regulators, you can call the National Association of Securities Dealers, and get their record of that firm, the record of complaints from consumers, the records of regulatory actions. Now, the fact there was a regulatory action against a firm does not prove they're bad guys. The finest firms sometimes have a broker that does something wrong. But if there's a pattern there, it's worth paying attention to. And that's especially important if you're getting what's called a cold call, that is to say a call from somebody you don't know, who's from a brokerage firm. If it's from a brokerage firm that you know well, if it's from Merrill Lynch, well, it's a reputable firm. There are many other reputable firms. If it's from some other firm that you've never heard of, you should be very suspicious. You should ask questions before you send the money.
Tomorrow we'll continue our stay here in New York City. Greg Tobin of the Book of the Month Club. Adam Bellow, former editorial director of the Free Press. Larry Kirschbaum, the CEO of Time Warner Books. Larry Mohn, the head of the Manhattan Institute, and Morley Safer of 60 Minutes will be among our guests. And we will not be here, though, on the floor of the New York Stock Exchange. Boston, you're next. Go ahead, please.
Good morning. Great show as usual. How are you today?
Welcome, sir. Nice to hear from you.
Okay, got a couple quick questions. Floyd, maybe you can answer this. When the gold standard was removed from backing our dollar, what effect did it have on the New York Stock Exchange, if any? And are there any good books that I could purchase that would give me the history of gold and its relationship to our dollar? Also, how are the people who ring in the day and ring it out at the end, how are they selected and how far in advance are they picked to participate in that day's event? And the last question is, the group that was on earlier, the guy that's being ushered in with his company to start his day on the exchange, how long did he have to wait on a waiting list before he could enter his company onto the exchange?
All right, thanks. A lot of questions. You want to start with the first part?
Well, I'll start with the last one. He doesn't have to wait hardly at all. If his company qualifies for exchange membership, it can happen very quickly. Some companies will go public and immediately trade on the New York Stock Exchange. And if the company qualifies, the New York Stock Exchange will eagerly recruit them. And if that fellow lists his company on the exchange and wants to ring the bell, the stock exchange will do their darndest to make sure he can do it. Otherwise, it's up to the people who run the exchange. As far as gold goes, gold was taken, there have been two things. Gold was removed as a formal backing of the U.S. currency in the 70s by Richard Nixon. I don't remember the immediate impact it had on the stock market. The actual gold backing of the dollar for you and me, that we could get gold for it, was removed in the 30s by President Roosevelt, not too far from when the market bottomed in the Depression. So I suppose one could look at those two facts and say it helped, but I don't think that was a causal factor.
Alan Sloan, that question I asked earlier, a column that you might have written to change things.
One of my specialties is finding funny little tax dodges, or sometimes funny big tax dodges, that companies or individuals are using. I did a thing about the Lauder family that has a cosmetics company, and how they had come up with a way to sell a lot of their personal stock and to defer the taxes forever. And this was not greeted with cheers by either the Lauder family or by the people in Washington who read articles in Newsweek and the Washington Post, which also runs me. And as a result of that, the law, they made some sort of change in the law. So in the end, some of the Lauders pay taxes. So I probably earned my money that year.
If you've just joined us, we're beginning to shout louder and louder as we try to be heard over the din in the room. Floyd Norris from the New York Times is with us, and Alan Sloan of Newsweek. The bell is about 3 minutes plus away. We go to Butler, Pennsylvania. Go ahead, please.
Yes, my question is on the Asian thing. Is the long-run effect going to make the companies in Asia come up to our standards in terms of accounting so that we'll be on a level playing field and we'll know what they're doing just like we know what people are doing on the big board?
Floyd Norris.
That's a very interesting question. The answer will depend upon the institutional investors and the banks of the Western world. There has been very bad accounting in much of the world, including most of Asia. And yet, in recent years, American investors, through mutual funds and through banks, were willing to pour billions of dollars at them. As long as that flow of money continued, they had no reason to give good accounting. If investors start to demand it over a long period of time, yes, it will probably happen. Whether that'll happen, I don't know.
We'll take one more call and then break for the bell. Let's go to Cleveland, Ohio. You're on with Alan Sloan and Floyd Norris. Go ahead, please. Cleveland, Ohio, are you there? Morning.
On a big stock company with the marginal interest policy, if they say the percentage of the loan is 35% and they call in over 60% of the loan for the payment without the knowledge of consulting me, is that ethical for the company to do that? I mean, if it was an agreement of 35% and they called in over 60%, is that correct for their company to do that?
Alan Sloan?
I'm not sure I understand the question.
Want to try it one more very quickly, though, caller?
Yeah, well, that's it. Is it ethical for a company to call over the percentage of their marginal interest call? Thank you.
I don't know what that means, so I can't answer it. I'm sorry.
I'm sorry for the caller. We probably have the wrong guest for the right caller at the wrong time. But anyway, we're going to hold the calls here for a few moments. Let's just watch the floor. You said, Floyd Norris, that you don't come down here very often. Why would you come down at all?
I come down occasionally to see the new technology. They are constantly improving their technology here. This floor is a very, very different place from the first time I came down here, probably 20 years ago.
Alan Sloan, why would you come down, if ever?
Well, I come down usually for voyeuristic reasons, just to see what it looks like, probably for the same reasons as Floyd, but less often.
Let's look at the platform where they ring the bell, and you can see we're only about 35 seconds away. Francis Carey is the gentleman there standing in the middle with the glasses on, and then Richard Grasso is beginning the cheering. From your experience, did they do this before cameras came here? They had the cheering and the...
They always rang the bell. There was often cheering. There was more likely to be cheering at the close of a day. At the close of a very good day, when the Dow might have topped 1,000 for the first time or something, there would be raucous cheering on the floor. There would sometimes be raucous cheering in the final few minutes as it looked like it was going to make some milestone.
Alan Sloan, when I came in this morning, I passed the gentleman downstairs about 6:30 in the morning, and I said, "Good morning, how you doing?" He said, "I'm great." And I said, "Why is that?" He said, "Well, because I don't ever lose here. I'm a broker. I can win every day, no matter what goes on. Are there people down there that never lose, no matter what happens to the market?
Pretty much, yeah. Well, the people we see downstairs are not the people trying to decide what a stock is worth or whether buy or sell something or what's going to happen in Asia. They're trading stocks, they're filling orders, they're buying things, they're selling things. They're here to make a zillion small profits. They are not here to buy Warren Buffett's company at 300 and ride at the 48,000. It's a different game.
The floor is loud and the market is open, and you're watching some part of this on the screen right there. Floyd Norris, is there any better way to do this?
I don't think so. There's been a lot of talk of 24-hour trading, and to some extent, in some things, it is a reality. In stocks, it generally isn't, and the reason it generally isn't is because you need the concentration of business. The reason you trade in a particular market instead of another is because of the liquidity brought by a lot of other people who want to trade that particular stock. And of course, liquidity is there because a lot of people want to trade it. This makes it very hard to take business from one market to another, because the reason you trade in the first market is the fact people trade in the first market. The hours, they've talked about expanding overnight. I doubt they'll ever do that.
Alan Sloan, can you think of another column that you've written that had an impact?
Yeah, I've written columns about stocks whose prices I thought were irrationally high, and after that they fell, if only briefly. I've had, again, any number of these tax dodge type things, because that's my specialty. And it's like the old game they used to play in the defense business, where there were missiles, then there were anti-missiles, then there were anti-missiles, where something comes to public attention, people change the law, people find a way around the law, they change the law again, and it goes on and on and on, but it gives me something to do. That's very important.
C-SPAN is live from the New York Stock Exchange today. We have about 27 minutes left. Our next call from Queens, New York. Go ahead, please.
Good morning, gentlemen.
Morning.
I am a complete layperson in terms of the stock exchange market. However, I was very curious as to how they decide to ring the bell every morning. I mean, what's the symbolism behind it? And how do they decide who's going to do it? And what's the process in terms of that, process?
Thanks. Richard Norris, who is the chairman of the Stock Exchange, was with us earlier and explained all that. Richard Grasso, excuse me, I said Norris. Floyd Norris is sitting right next to me. You want to explain it one more time?
Sure. The decision, the bell originated because they needed a way to tell all the traders that trading could open, and at 4 o'clock to tell them that it can close. Now, in the original, they obviously had to have someone ring the bell. Technology had not advanced. Obviously, now they could have the bell automated. Making a bell ring at a certain time is not real sophisticated. You probably have an alarm clock that does that. But it's become a little bit of celebrity. Dick Grasso can let people ring the bell. They feel good. Their friends get to see them on television. And so it's another little thing they have to offer to people.
Dearborn Heights, Michigan. Go ahead, please. You're on the air.
Yes, Mr. Lamb, thank you very much. You're a great influence on our family and on our adult children. I have a question here. I've recently received a notice from a corporation that wants to reorganize or convert into a stock holding company and a stock life insurance company. And I don't understand what a stock holding company would be. I wonder if Mr. Norris or the other gentleman could explain.
Mr. Sloan?
Right. That wouldn't be the principal financial group, would it?
It's the financial group. They're changing the name of the company also. Now, I don't know. I really don't know about this.
Yeah, my guess is, knowing nothing about it, but that's never stopped me before, is that it's an insurance company that's now owned by the customers that wants to change itself into a different form. And if I were, in fact, one of the customers, I would not vote for that unless someone were paying me something. which I don't know if they are because I don't know the circumstances. But if they're not paying you something and the company is financially sound, I don't see any reason to vote for it, but everyone probably will anyway.
Indianapolis, Indiana, you're next.
Yes, good morning, Mr. Lamb.
Hi.
I wanted to know about all the paper on the floor. Is that to make it look like a busy place, or is that just is that a setup?
Thanks. Actually, we watched them clean this up last night, and there was lots of it. Mr. Norris, do you want to try that one?
No, it does show that some people are a little sloppy. They write a lot of notes. One of the things that's happening down here on the floor is brokers are taking notes at their phones, which are around the wall, and then running to the given post to execute an order for someone. And they take notes on what they're supposed to do. When they're through, some of them probably drop their now useless notes rather than finding a trash can. This is not the most couth place in America.
If you've just joined us, you're watching activity live from the floor of the New York Stock Exchange, and we're sitting on a balcony overlooking the floor. There are 4 rooms in which they trade in, all with access from the main room here. They call this room the main, actually, what do they call it? Main Stock Exchange, main floor, main room. There's a better word than that, but the other rooms are called the Blue Room, the Extended Blue Room, and the Garage. Morristown, Tennessee, you're next. Go ahead, please.
Yes, I'd like to know, with all the bull market that we have, what do you think is being driven? Do you think the 401k plans are driving it? And with all the billions of dollars being dumped in 401k plans, even though you may get a slight bear market, what do you think in the future of it? Do you think it might continuously go up for a very long time? Could you give me some what your ideas are? I'm going to hang up so I can listen to you.
Alan Sloan, want to take a shot at that one?
Right, you couldn't give that to Floyd, could you?
But we can give him part of it.
Oh, okay. I mean, that is the question, which is, why are stocks going up? Is it because companies are more valuable, or is it because a lot of money is chasing stocks that otherwise wouldn't be chasing them and driving up the price because there's a limited supply of stock? I think it's probably a little bit of both, and that if tomorrow a meteor struck the earth, 401k plans vanished, I think stock prices would fall. But I don't know what the future is, because, again, if I did, I would not be here. I'd be out making real money and probably buying C-SPAN.
Floyd, yeah, well, Floyd Norris on the front page of the Business Day of the New York Times today is the headline, SmithKline and American Home are talking of huge drug merger. The story says that both companies are worth over $60 billion. It'd be the largest merger in the history of the world. Is this good?
I don't know whether it's good. In some sense, this will, if they do this, and there's no guarantee they're going to do it, both stocks have been bid up on speculation, and I don't know what's going to happen. If they do it, there's going to be a swap of stock. People who used to own stock in American Home Products will now own stock in heaven knows what they'll call it. SmithKline, American Beecham. I don't know. They will probably get some savings out of that, operating savings. On antitrust grounds, I don't know if there are reasons to oppose it. We pay a lot of attention to mergers. Many times they're relatively unimportant. They do keep Wall Street working. Wall Street puts companies together in mergers and gets fees. Then they take them apart, and when they do spin-offs, and they get more fees. It's a very nice arrangement for Wall Street. How important it is for the economy, it varies.
Our director in Washington is Brett Betzel. The man on phones is Nick Aratakis. And our producer for the morning show from Washington is Jules Mulvey. Let's go to Fort Leonard Wood, Missouri. Go ahead, please.
Good morning.
Hi.
Hi. I'm watching the scene now, and part of me is like, I'm amazed at the technology advance, but part of me is horrified because I'm curious to know if Wall Street is prepared for the supposed year 2000 computer glitch, and if your panelists know anything about it, if they could address that issue for me.
All right, thanks. What you saw on the screen there was a reporter on the other side of the room looking up to the balcony where there's a fixed camera on the wall, and with that note, I'll turn to Alan Sloan and see if he can answer the question.
Again, I don't know. Everyone on Wall Street claims to be ready for it. They're making progress. There won't be any problem. That sort of worries me, because if people were running around terrified, I'd be sure they'd make it. The fact that people are calm concerns me. On the other hand, I don't know if my bank is going to make it. I don't know what's going to happen. I just hope maybe by then I'll have Treasury bills. That's a joke. I'm just kidding. I don't know. They claim to have this under control. It's heavily computerized. If you've gotten anything new in the last 3 or 4 years, I think it's already solved this problem. I don't think the problems will be here. I think the problems will be in the government or elsewhere.
Mr. Norris?
One of the advantages Wall Street has is they've been trading bonds that mature in the next century for 30 years. So their computer systems, at least some of them, have clearly been able to cope with this. No one knows how bad the problem is going to be. It's one of those things where conceivably for the world financial system, the last computer that doesn't work could mess up a lot of others. As you may have heard, the securities industry is trying to persuade the government to make December 31st of 1999 a holiday, so they'll be able to have an extra day to deal with the problems. Whether that day will help, I don't know. I do think, though, my observation on year 2000, if you think about it, the vast technological progress has been made in this century. You can run through the list, from airplanes to computers. And yet 100 years ago, this would have been unthinkable. The dullest student in grammar school in 1899 understood that 1900 was the next year. As I would say, the dullest student today understands it. But our computers apparently can't, and I think that's hilarious.
Our two guests, Floyd Norris, a Los Angeles native, as we said earlier, worked for the United Press at one time, the Associated Press, and Barron's. Now with the New York Times for the last 9 years, but way back there somewhere you worked for John Durkin, a Democrat from the state of New Hampshire, a senator at that time, as his press secretary. What year was that?
I worked for him in 1978.
How long?
77, 78. I lasted 7 months. I was not a very good press secretary.
Alan Sloan, you worked for the Detroit Free Press, Money Magazine, and Forbes Magazine. When did you write your first standalone column?
Well, probably actually something ahead of that. I used to be, heaven help us all, a sports writer in Charlotte, North Carolina. And I was not a very good sports writer. And my hair was long. My accent at that point was thick, as opposed to now, of course. And I didn't really fit in real well in Charlotte, North Carolina, or for that matter, anywhere. But every once in a while, you got to write a column in the Charlotte Observer, which is where I was. So my first column was sometime probably in the 60s at the Charlotte Observer, and mercifully I've lost it.
Next call, Fairfax, Virginia, in the Washington suburbs. Go ahead, please.
Hi, good morning to all of you.
Morning.
I'm 19 years old, and I attend university, and I was just wondering how, since everything's located up in New York, I was just wondering how someone would go about getting started working in Wall Street or New York Stock Exchange, and how someone, would just go about doing that and passing the exams and so forth.
Thanks. Mr. Norris, you want to take a shot at it?
Well, there's an awful lot of jobs, and not nearly all of them are in New York. Brokerage firms, of course, have jobs all over the country. Undoubtedly, in Fairfax, where you live, there are a number of brokerage firms that have offices, and they hire people. Some of them require you to pass exams administered by the NASD. Those are principally the jobs for brokers and such, but there are many other entry-level jobs. There's a lot of jobs available. Jobs on the floor here obviously can be obtained. They range from very good jobs to very menial jobs running around delivering messages.
A number of years ago, I remember asking a question of the then Secretary of Labor, Robert Reich, as to where he would go if he wanted to make the most money in America. And his very short answer was Wall Street. Alan Sloan, we had two people here earlier who had just a high school education that admitted, they didn't tell us how much, but they were making a lot of money.
Well, that's one of the things I like about Wall Street, is that it's a meritocracy. if you could cut it and you can do the job, you can make a lot of money. Generally speaking, if you can't cut it, you're out on your behind. And I sort of like that.
15 minutes to go and 15 minutes until we join the Burton hearings in Washington. Atlanta, Georgia, you're next.
Good morning, gentlemen.
Hi.
I would like to ask if there's a possibility, why can't we get more in people involved with buying stock on the exchange? I recently just started back in October, and I'm 46 years old now, and I feel like I've really wasted a lot of my years when I should have been investing in the exchange. And how can we get more people, American citizens, involved with investing in the exchange? Thank you.
Alan Sloan?
Well, there are already supposedly 50 or 60 million people who either own stocks of stocks or own mutual funds which own stocks. I'm not an evangelist for this or for anything. I think it's up to people to make up their own minds. I mean, stock ownership has generally worked, but there are years where it's disastrous. I mean, I don't want to have people invest or not invest. That's their decision. I give them the information. I don't tell them how to act on it.
Floyd Norris, your newspaper comes out 7 days a week, and every day that this stock market's open. How often have you seen over the years where you'll write something and the market moves?
Oh, it happens sometimes. Moving small stocks obviously is relatively easy in the sense that there's less float, fewer shares outstanding. In the long run, I don't think journalists usually have that great an impact. If I write that a stock is overpriced, it may go down the next day. If I'm wrong, it'll eventually come back up, and people who bought when I was wrong will make a little more money than they would have.
Laurel, Maryland for Floyd Norris and Alan Sloan. Go ahead, please.
Yes, I have a technical question concerning individual trading stocks. If I call up and let's say buy 100 shares of a stock at market price through my Touchtone trader, how exactly is that price determined in relation to everything that's going on the floor?
Mr. Norris?
On the, as you can see down on the floor, you can't see the details perhaps, but you'll see a lot of computer screens. On those screens is posted the bid price and the ask price of every stock they trade here. The bid price is the price that somebody says, I'm willing to pay for it. The ask price is the price that somebody says, I'm willing to sell at. When you put in a market order to buy, the worst price you should get should be the asked price. Conceivably, you'll do better, but that's how it's determined, because it's possible someone else, perhaps Alan over here, will have put in an order on the other side of the trade, and they'll be able to match the two orders, and you'll both do a little better than the posted prices.
Durham, North Carolina. Go ahead, please.
How you doing? Great show. I'd like to ask Florida Alan, with all the technology that the stock market has pretty much moved into the area, why do we still have people executing transactions? Why not pretty much have an order placed directly instead of having a person on the floor run across the floor and actually place that transaction?
Thanks. Alan Sloan?
Well, again, Floyd discussed this earlier. One of the things the New York Stock Exchange does is if things go wrong, there are people here to fix it. If there are too many orders or too many buys or too many sells, the people are supposed to work it out, and that's the rationale for having all of these people. You probably could get by with fewer, but if you did that and anything went wrong, you suddenly have computers talking to each other and getting no answers, or all sorts of problems like they had in 1987, where brokerage houses would trade with each other, but they just wouldn't pick up the phone. So I think that's the rationale for this. Whether they really need all these people, I don't know, but it does give them something to do, which is important.
About 10 minutes to go in our program. I know as I sit here, I look up at the board and it says that the market is down 68 points. And we go next to Saratoga Springs, New York. Go ahead, please.
Yeah, hi. I think you may have already answered my question, but I wanted just a quick overview of when I call my broker and I say I want to sell X shares of GE, for example, what happens? And I guess if you've already answered that, I'm curious as to the little keypads that they're typing into on the floor as to just what that was. And I'll hang up and listen. Thank you.
Floyd Norris.
If your broker chooses to execute your order on the New York Stock Exchange, and assuming it's a 100-share order, a relatively small order, they will probably send it down to the floor through a system they call Super Dot, which just means it's a way to deliver the order to the floor. There, it may be electronically matched up with an incoming order from someone else. In any case, it will be executed promptly by the specialist. What these people are doing with the keypads is they are recording orders. That used to be done by hand on little sheets of pads of paper. Earlier caller asked about paper. There's less paper now than there used to be by a long shot, because a lot of this is done on keypads. And when they're writing on the keypad, they're writing down that they've just agreed to trade 100 shares, to buy 100 shares of GE perhaps, and they're writing down who they bought it from, the badge number of the other trader or the specialist. The other trader is also filing a report. At the end of the day, they're going to match those reports. And if they don't match, and some don't match, sometimes I thought I bought and the other fellow thinks he bought too, then they have to argue it out. Excuse me. That's basically what they're doing down there.
We have 4 of our own cameras here on site, but we're also getting a lot of help from Tony Walenti's cameras that belong to the New York Stock Exchange. They have 9 of them throughout the building. A $5 million facility. Let's go to Charlotte, North Carolina. You're next. Go ahead, please.
Good morning, gentlemen.
Hi.
My question is, I bought an IPO last year, and the broker, it was $1 million issue. The broker assured me that it would become marginability. When it did, the people that were financing it didn't approve the market it came on, but yet me and 4 other individuals got the marginability, and now the stock has got down and we're getting maintenance calls. Is that possible that they can be selective in who gets and who does not get the marginability?
Thanks. First of all, Alan Sloan, is an IPO?
All right, an IPO is an initial public offering, which means that's stock that is being sold to the public for the first time. And margin means that the broker will lend you money against the stock.
What's marginability mean?
Marginability means that the broker is allowed to lend you money on that stock. There are certain stocks that are called not marginable. Generally, if something is trading for less than $5 a share, they won't make loans on it, and there are other rules that I don't understand. But generally speaking, I'm very wary. I'm a born skeptic, and generally, initial public offerings that are available to me at the price at which the stock comes out, I probably don't want, because the reason it's available to me is that the big customers of the brokerage house don't want it, and the things that I would want that will go up are the things I can't get because the good customers get it, and then they turn around and sell it. So if you're playing with IPOs, you're a lot braver than me. That's all I have to say in the way of advice.
On Friday, Caroline Miller of New York Magazine, Dorothy Rabinowitz of the Wall Street Journal, Robert Forbes, one of the Forbes brothers, and we'll talk about the Forbes Museum, and Hugh Downs of 2020 on ABC will join us from another studio. Waco, Texas, you're on the air.
Hi.
Hi.
Drug companies, insurance companies, hospital management companies, hospital equipment manufacturing companies all have just billions of stock on the stock market. I would like to know if they would take a nickel, each individual trader would take, or stockholder would take a nickel less on their stock. Would that bring the health care cost of our country down?
Floyd Norris, thank you.
Well, I assure you that if the profits of those companies collapse, the shareholders would end up taking a lot more than a nickel less on their stock. One of the great arguments in healthcare has always been the role of the for-profit companies. The for-profit companies will tell you they're more efficient because they're interested in the bottom line. The not-for-profits will tell you the other guys are greedy and the money that is going to shareholders could be plowed back into better health care or lower costs for customers. Sometimes both have an answer. I think the cause of higher health bills in this country, though, is the fact people are demanding more health care and the fact that it is so very hard to ration health care. We accept that we all can't live in beautiful mansions, as some people do. It's much harder to accept that the latest advance in medical technology should not be available to all of us. And that drives costs up. There aren't easy answers, I don't think.
You're watching the floor of the New York Stock Exchange, people doing their business here. The market has been open just for about 25 minutes. We only have 4 minutes to go. Worcester, Ohio, you're our next caller. Go ahead, please.
Yes. What I would like to know is I am a stockholder in a company here in Worcester. May I name the company?
Sure.
Okay, it's Rubbermaid Incorporated. And I am hearing rumors, we have been hearing rumors that Rubbermaid is for sale. And they have, as a retired employee from there, we have gotten letters from the company asking if we would like to have them buy our stock back. What is the significance of this, that they are buying their own stock back?
All right, that's good. Thanks for the question. Alan Sloan?
My guess is that you probably own less than 100 shares, and the company wants to get you off its books so they don't have to mail you annual reports and statements and, you know, spend money taking care of you as a stockholder. That's probably the significance of the offer they've made to you. In general, if a company goes out and buys back a lot of its stock, which doesn't sound like what's going on, but generally speaking, if, say, IBM or my company, the Washington Post company, says we're in the market to buy a lot of our own stock back, that generally keeps the stock price higher than it would otherwise be because you've got a big buyer, the company. So it's generally good for the stock price if the companies are buying back their own stock. If they're buying back their stock from the likes of you, or for that matter, I have some little holdings where some of the companies want to buy the stock back. It doesn't really mean much of anything except they want to get us off the books.
The hearings we're going to be showing in just a few moments are the campaign finance investigation of the Interior Department and the Indian tribes. Coming up, the Burton hearings in just a few moments. We go to Manhattan next. Go ahead, please.
Hi, good morning. First of all, I want to say I appreciate you picking up my call. I've already called in as a Democrat and a Republican, and I finally got accepted as another. I don't know what that means exactly, but I appreciate you picking up anyway. My question is in relationship to the differences between companies being recruited by either the New York Stock Exchange or NASDAQ, or companies themselves going to those different exchanges, and why do they do so, and what's the difference between the two, and why is there so much talk in regards to the NASDAQ being the stock exchange of the next 100 years, and what does all that mean?
Thank you, caller. Mr. Norris?
Well, the next 100 years was an advertising slogan they've dropped. The exchange, NASDAQ, and the New York Stock Exchange, and for some companies, the American Stock Exchange, are vigorous competitors for listings. All of them have listing standards. The New York Stock Exchange probably has the strongest standards. The others are comparable, though. Historically, NASDAQ was an inferior market, and companies that were eligible to trade on the New York Stock Exchange and didn't, I've always believed, were doing their stockholders a disservice. It's not as clear anymore. Thanks largely to the government investigations, NASDAQ has become a much, much better market. For most of us, though, of course, it's an issue we can care about but not do much about. If you'd like to own Microsoft, you must buy it on NASDAQ. If you'd like to buy General Electric, well, it is traded on the New York Stock Exchange, and that's the reality of it.
Last call for our guest from Buford, Georgia. Go ahead, please.
Hey, Brian, how you doing?
Welcome. Good.
I would like to ask about the hostile takeover AT&T had a couple years ago when they took over NCR in a hostile bid, driving the price up through the roof overnight. It was later there were 6 individuals from AT&T that went to jail, were convicted of insider trading, and because of that insider trading that they were performing, me and my mother were attracted to buy or to sell some covered calls on NCR. My mother lost $1,000 overnight, and I have attempted to see what recourse we have there. So far, every attorney says we have a good case because of the convictions, but no attorney will take it on because they're very afraid of AT&T.
All right, sir, thanks. Alan Sloan.
Again, I'd have to know a lot more about that before saying anything, and I don't know anything about you, your circumstances, or any of that, so I'm going to hide.
Let me ask the two of you as the last question. If you were a little investor, someone who had a life savings, how much of it would you put in the market?
That varies by age and it varies by your risk tolerance. Stock prices are very high now on a historical basis. That was also true a year ago, and they went up 20 or 30% over the next year. In general, money that you will not need for a long time, you should have more of it in stocks. If your money is being saved in order to put the down payment on the house 3 months from now, I don't think any of it should be in the stock market. If you're 30 years old and you're saving your money for retirement, then a lot more of it ought to be in the market.
Alan Sloan?
Well, I am a little investor, and most of the money that I don't need for college tuition the next couple of years is in fact in the stock market, because I've got 12 years until I retire at least, and I don't know what else to do with it. So that's what I'm doing. What you do is up to you.
Alan Sloan, Wall Street editor for Newsweek. You can find his column in there and in some newspapers around the country on a weekly basis.
Sometimes.
And Floyd Norris, assistant business editor of the New York Times. How often do you write?
I write usually 2 or 3 times a week. Always on Sunday and usually a couple of times during the week.
Thank you both for joining us from the New York Stock Exchange, and thanks to the chairman and CEO, Richard Grasso, and also to Catherine Parker, Len Newman, Tony Valenti, all with the